If we look at the S&P and we see what the big sectors are, okay, so information technology is the big sector. 18% of the S&P is information technology. And if I use one of these other charts, let's use this one. XLK is basically the information technology ETF. It looks just like the S&P. Here's Thursday, Friday up move. Looks like it's taking off. It's a little overbought, but it looks great. It really looks great. Even if it has come a long way, we'll have to see if it extends. All right. The other so the information technology, 18% of the S&P looks pretty good. All right. What's the next biggest sector? Financials. Well, let's take a look at the financials. Now, the financials certainly don't look as good as the S&P or the XLK, but there's hope. Huge resistance in the XLF, right? Let's call it $15, $15.06. If the financials take off and take out this 15.06, they're going a lot higher. Now, I don't know what the dollar has to be doing for that to happen. I would think that since these companies are domestic-based companies, not like Coca-Cola, where X amount of assets or business is done over abroad, and a falling dollar is very helpful. These companies in here, Bank of America, JP Morgan, Wells Fargo, on and on. This is an American thing. So a falling dollar, I don't know. I would think that the falling dollar, you need a stable dollar, not a falling dollar, to make a difference to the XLF. So the dollar is coming into focus here too. All right. Now, that goes with the XLK too, the information technology ETF, because those companies, they're all sorts of, we're talking about computers, peripheral software, diversified telecommunications, semiconductor equipment, internet, wireless. A lot of that is domestic, and we need a relatively strong dollar for that. So back to the XLF. So 16.5% of the S&P is wrapped up in here. And so I happen to like this setup in the XLF, which means that early next week I'm going to be focused on the XLF, because the XLK, we go back to the XLK, that's a little rich for me right here after making an up move from 20.5 to 23.12. So let's do the math. 20.50. So that's already 13%. Right? So let's go to the XLF. Alright, the XLF really, by comparison, it's gone up, let's see, 1460 divided by, let's call it, 1330. That's 9.8%. So if we look at it this way, what sectors in the S&P have to really kick in to give a boost to the flying technology sector, which is the leadership? One of them, for sure, is the financial sector. So let's take a look at Bank of America. Now, I like the way Bank of America looks, because Bank of America has a long way to go on the upside. Let's get rid of these lines because they were from another chart. Key resistance, 14.05. Closed at 13.60. If it gets through 14.05, and this is the 20-day MA, it came down and tested it. Let's darken it. Okay, so here's the 20-day MA. So Bank of America is something to keep your eye on. It breaks back below Friday's low. 1330, that's a warning sign. If it certainly gets underneath Thursday's low at 1312, that's a sell signal. I wouldn't be in it. But Bank of America could be on the top of the list tomorrow to get involved. Gets through 1460, and then you have a swing move of 12 to 14. The swing move will take you to 1520, which is let's call this right in here. So that's the swing move on a bullish recovery period. Forgetting whether this is a new bull leg or whatever. All right. So that's Bank of America. JP Morgan is another one. Looks better than Bank of America, but it still has some major problems, major resistance. 4170. Let's call it 4120.70. But it too, if it can get through, this is JP Morgan, if it can get through 4170, then JP Morgan, we can make the case that JP Morgan has one very nice looking major W pattern, otherwise known as a double bottom, right? And that double bottom gets through 4170. Basically, you have the double bottom at 3540, 4170, let's call it. What did I say? It was 3550. That's $6. In theory, you add that on to 4170, and you get $48. So that's where the absolute measured objective is in JP Morgan.